Hello everyone, welcome to Just Invest Today. Man, what a morning, man. Holy crow. Facebook took 25% dip. All these stocks are crashing, man. Remember what we just had? We had freaking Netflix crashing. We had freaking Etsy crashing. We have all of these stocks just crashing, falling off a cliff after earnings. Woo! This is a time to be alive and we have to love this. I literally just put out a video about talking about I love market crashes. And we really got to get down to it because guess what, guys? I just sold all my Micron, all of it, to buy this dip. Like, this dip is unbelievable right now. It's crazy right now. I had to buy into Facebook. I put a way bigger position in Facebook now because I'm just like, what? I'll take my profits off of Micron. I made like what, 20% in a matter of 2-3 months. Sell all of that, put it into Facebook right here, right now. It's unbelievable how cheap this company is. Can you name 10 companies better than Facebook's business model of generating income, being as dominant? Like, it's literally impossible to figure out another business model or another business better than Facebook. You can't name 10 in the US. It's literally impossible. So how's it selling like a tobacco company, like a freaking, like Intel? How's that possible? It just doesn't make sense. So I had to buy this company, Facebook, because it's super undervalued. And that's why you have to love the crash. We are going to break down the numbers in this video, see what I'm seeing. Tell me if I'm wrong. Tell me if no, Facebook is a bad company. It's going down the hill. Tell me, give me some information to see maybe I'm wrong in this purchase, but I'm going to break it down in this video. But first, we got to start with this. This is a hilarious post by Joe. Mr. Market is fickle, and this is what's happening in the market. Q1, evil company. Q2, monopoly. You see what I'm saying? Like, look how fast the sentiment changes. Q3, metaverse play, and now Q4, competition, expenses, reverse network effects. All in 1 year of the same exact 100 billion plus revenue company. So interesting to watch. Facebook. And this is what it is. This market is all sentiment driven right now. You can't have a company make one mistake. A company makes one mistake, it sells off 40%. Guys, we're dealing with a real business. This is not like some kind of like fake business where everything just goes perfectly in line. Like, that's what people are missing. There's no business in this world that just beats estimates, beats earnings, beats revenue guidance every single day, every single year, every single second. Not Google, not Amazon, no company. This is why it's so ridiculous what's happening in the market. So let's break down some of these numbers. Can you please like this video, subscribe to my channel? I'm providing you with so much new content every day or every week. So guys, please like and subscribe. Click that subscribe button right now. At our earnings presentation Q4 2021, let's get into some of it really quickly and just see what I'm seeing. Advertising revenue by user geography. Look at this. It's all went up. US, Canada, Europe, Asia Pacific, rest of the world up by 15% from Q3 2021 to Q4 2021. Revenue by user geography all went up. US, Canada, Europe, Asia, rest of the world. Amazing. Total revenue went up 20%. That's amazing revenue growth. Look what Apple did. Apple did 11% and everyone's congratulating Apple. Wow, look what you did. Amazing. 11% beat. No revenue guidance. No guidance going forward. People congratulating Apple. Everyone's so happy. Meta does 20%. No, all bad, right? So that's what you're seeing. When it comes to Facebook, when it comes to Apple, you're just seeing the difference in viewpoints of the companies, right? So then we have Reality Labs revenue. So 717 million to 877 million, which is a pretty good markup. Then we have Reality Labs operating loss. And this is what people keep coming back to. So this is where you have to decide, do you believe in Mark Zuckerberg's vision on the metaverse and what they're doing and how they're spending their money in that section? If you don't believe it, just move on to another company. If you believe it, invest in Facebook because really have to think about it. I wouldn't want Mark Zuckerberg not looking into the future onto what's next. Like, that's what I'm looking for. I'm looking for companies that are looking into the future. Because what are you going to do with all that money? They have like 50 plus billion on their books. Like, they're still making their apps better. They're still doing, they're still working on WhatsApp. They're still working on Facebook Messenger, on Instagram. They're still making those products better. So they can do that, and they can focus on their side hustle, Quest 2. And that's already making progress. So yes, they lost $1 billion plus on that. You're seeing operating margins go down to 37%. But if you don't believe in Facebook, then yeah, the operating margins are going to go down because they're reinvesting that money. And that's what we want to see with Facebook. We don't want them to just have all this money, not trying to think of new stuff to do, and not trying to like reinvest that money. I'd rather that to get pain in the short term, right? I'd rather that pain in the short term for that longer term vision and what they see for the future. Because Mark Zuckerberg has a history of outperforming. They have a return on equity, return on capital 30% plus. So I believe in what they're doing and their vision is going to pan out. But if you don't believe in that, then I guess Facebook is not for you. And that's the key difference you have to make, is if you believe in Zuck or you don't. And he's still young. He's like 37, 38. So he's such a young CEO. And then this goes back into net income. They had a decline in net income because remember, they're spending more on R&D, more on facilities, better data services, better data servers. They're building some supercomputer for better AI. So look what they're doing. And this actually R&D is going to help advertising. They said the advertising, their spending that they're doing is actually helping better advertising because they have better artificial intelligence to figure out what customers or what people are looking at, because we see what happened with the whole Apple iOS and how it's affecting their business. So they're actually investing in better AI to detect what customers want. So the R&D is not all Quest 2. And we're going to go back into that when we go to the earnings call, because they talk about this too. People are not really reading into it. Capital expenditures, yes, that's going to go up $4 billion because they're spending more on the future. So I'd rather them spend more on the future than just be stagnant and just build up Facebook and Instagram and WhatsApp. Like, that's always going to be there. Let's say that it doesn't work out. The whole metaverse doesn't work out. It doesn't pan out. They still have Facebook, Instagram, WhatsApp. And that's always in the top 10 of the downloaded platforms. So even if that doesn't pan out, they're still generating 38 billion in free cash flow. Like, and that's only going to increase. Think about it. That's only going to increase. And this is a huge thing again. This is another huge thing people keep talking about. The active users, daily active users went down, 100 million. But think about this. They already have 1.9 billion people. Like, what are you talking? Like, how much more users do they really need? Like, if you just increase your revenue per user, which they're doing, this is all going to make sense in the long run, and how they're expanding in India and different markets. Think about that too. And I still think that's just a quarter over quarter thing. It's the first time their daily active users went down, but I don't think that's a permanent thing. Do you think it's a permanent thing? You're going to see their active users go down and down and down and down and down? I highly doubt that. They really have a monopoly on the whole sphere of social media. People are not going to leave Facebook that much, Instagram, WhatsApp. Like, there's so much different aspects that you can use for business on those platforms. And as a community in groups, it's not going to go. Like, there's no way. And you can generate more revenue per user. Look with the rest of the world. Asia Pacific, $4. Average revenue per user. Are you telling me they can't get more users, more revenue per user with this? $4 compared to what? US and Canada, 52? And we know the Asia market is growing like crazy. They're gonna even Europe is gonna be growing. The rest of the world, like Africa's e-commerce businesses are growing rapidly. So just think about that. They're going to be able to generate more revenue out of these users eventually. Like, I can see this going up to 15, 20 in the next 10, 15 years. So I'm not really worried about the daily active users. It's more about how much revenue are they going to get per customer, and then that's going to go up. Because think about it, the e-commerce space, the whole digital space is growing. It's growing like 15-20% in a lot of different regions, and that's going to continue to grow. And the free cash flow, if you add up all the free cash flow for the year, that's 38 billion in free cash flow. Can you name me other companies that can generate this type of money? And remember, it's all about cash flows. Think about it. That's why you invest in the business. It's about the cash flows of the business. That's why you're investing in the business. You're putting down money now to get cash later on. So do you think Facebook is going to be able to generate more free cash flow later on? Yes. Free cash flow has been growing at 27% for Facebook, and it's at 38 billion right now. So do you think that's going to go down or go up in the future as more advertising happens, more spending? And Facebook has been dealing with a lot of headwinds because we already know inflation, supply chain issues. So that's what they're saying. They're going to deal with a lot of headwinds. They're projecting 3 to 11% just for one quarter. Think about that. It's just one quarter because the whole economy is dealing with headwinds, supply chain issues, inflation, just advertising targets is different. Like, that is not for forever. Like 3 to 11% projecting, that is not forever. That's what you guys got to think about. It's just for the quarter. They projected it out. And people are using that as the Bible that, yes, Facebook, that's going to be the rest of Facebook's history, 3 to 11% only. And people are just not looking at it correctly. Now let's go to Facebook share repurchases. Oh my, 45 billion. So the cheaper Facebook gets, they're actually going to repurchase more shares. So I'm happy that Facebook's go down lower because now they can repurchase more shares at cheaper prices. So that's also another amazing positive. Now we're going to read this earnings call, and this article basically sums up what happens during the earnings call, and it had a lot of issues, and people see this as a lot of issues, but I'm seeing it honestly a little bit different for Facebook when you really think about it and when you get into the weeds of what's happening with Facebook. The company grew by 20% and the net income still surpassed 10 billion despite an 8% drop. But signs of the mounting challenges for the company in the short term at the very least were spaced throughout an hour-long earnings conference call. One notable item was revenue guidance for Q1 that fell short of the analysts' expectations, 27 billion to 29 billion, 3 to 11% growth year over year. And the chief financial officer, Dave, suggested the company would face headwinds both in impressions and price growth, where price affected by modestly increasing in ad targeting and measurements headwinds and platform and regulatory changes. So when you think about this, they're getting into more reels, and more reels is thinking about it like TikTok, and it's hard to actually advertise on reels right now. But they're saying they're going to start advertising more on reels when they kind of get that ground and that footing first. So that's where you see a lot of the headwinds are, is that they have to get their momentum into reels. It's almost like switching when they had to switch the stories to the feeds to stories, and then stories became a major advertising platform, but now they have to go to reels because reels is the new way of consuming on Facebook. So that's what they're doing right now. So they talked about the iOS, the Apple tracking, and he takes major shots at Apple again. How Google is actually paying Apple like $10 billion to use the search as a default setting on the iPhone. So here we have the perfect play right now. Like Mark Zuck is amazing. Think about it. He's saying that iOS, they're going against Facebook and their small businesses. They're not able to advertise better. So that's one negative. He's saying Google is paying Apple $10 billion to basically use search as a default platform on Apple. So that's another advantage. We see the huge drawdown of we see the huge Facebook drawdown of its market cap and its price. A huge thing as well. We're seeing a declining users on Facebook. Guess what? This is all bringing back to the whole theory of what Moj Prabhat was talking about, how monopolies, they want to feel like they're like monopolies don't want to say they're monopolies. So all this talking of Apple is bad, Google is bad, look what's happening to our company. This is all setting the stage of saying we are not a monopoly. Don't look at us. Look at Apple, look at Google. Do you see what's happening right now? That's how I just see all of this talking points of his headwinds, of the headwinds of the company. The company is not generating as much profit, or the company is going down the drain. It's all setting up the stage of saying we are not the monopolies anymore. He talks so much about TikTok as the huge competitors, the boogeyman. They're taking all the shares from Facebook or all the profits from Facebook. Again, he keeps reiterating this stuff because remember, people keep saying Facebook has no competition, and they're doing an FTC meeting again saying you are monopoly, you got to disband your company. So when people look at this, they're gonna be like, whoa. You see all these challenges Facebook is facing? You see everything that's going on? Facebook is not a monopoly. This is this is my whole view, and this is exactly the playbook I'm seeing. I don't know if I'm going crazy or what, but I'm seeing Mark Zuckerberg saying all the right things and saying we're not the bad guys. Look at Apple, look at Google, look at TikTok. They're taking away all our market share. We're not a monopoly anymore. And this is what I'm literally seeing with this whole earnings call. And that's how I see it. This is the playbook. Or you can look at it on the opposite side of saying, yes, TikTok is crushing Facebook. The competition is not even close anymore. TikTok is ruining Facebook. The iOS from Apple is crushing Facebook's business. Facebook is not going to be profitable anymore. What Google is doing, Google is super superior to Facebook. It can't even hold a candle to Google anymore. And you can see it that side, or you can see it my side. So depending on where you want to view it and how you want to see it, you can kind of twist the argument any way you want to. But I believe what Mark Zuckerberg is saying underneath all the smoke and mirrors is saying that we are not a monopoly anymore. Look at what's happening to us. Look at everything that's hitting us right now. And I honestly think it's perfect timing as they're going to do an FTC meeting and they have to plead their case on why they shouldn't be broken up. And this is a perfect segue into that whole sphere. So that's what I'm seeing. Then lastly, I really want to say this point right here. Because what they talk about is really crucial because people are really worried about all the investing spending by Mark Zuckerberg and how they're seeing Facebook going forward. We expect 2022 total expenses to be in the range of $90 billion to $95 billion, updated from our prior outlook of $91 billion to $97 billion. Our anticipated expense growth is driven by investments in technical and product talent. So this is where they're driving their expenses from. And infrastructure-related costs. We expect 2022 capital expenditures, including principal payments on finance and leases, to be in the range of $29 billion to $34 billion. Unchanged from our prior estimate, our planned capital expenditures are primarily driven by investments in data centers, servers, network infrastructure, office facilities. This is all helping advertisements, community buying, Facebook, the business commerce section on WhatsApp, Facebook shops. This is all going to help drive that. So it's not all Quest 2. People keep thinking it's just all Quest 2 spending. It's not. As we discussed previously, this range reflects a significantly increase in our AI and machine learning investments, which will support a number of areas across our family of apps. While our Reality Labs products and services may require more infrastructure capacity in the future, remember, Reality Labs is the Quest 2 in the metaverse, they do not require substantial capacity today, and as a result, are not a significant driver of 2022 capital expenditures. So right now, the Quest 2 is not the driver. The metaverse is not the driver. They're saying they're spending on the networks, infrastructure, the data centers, the office facilities, getting more talent, right? So we gotta look at that as all gonna be driving the bottom line eventually. That's all gonna help their free cash flow, their revenue growth looking forward. So that's what I'm seeing, and that's how I'm gonna end it there. Maybe you see something different. Maybe you see something different with Facebook. Tell me what you think, because $247 for Facebook, 17 PE, growing at 20% plus, one of the most dominant companies in the world. Whew. That's a large asking, man. That's a large. So tell me what you think, man. I bought more Facebook. I'm super happy, and I feel like Facebook is gonna kill it in the future, coming years, man. Remember, these are year investments, not months. Don't worry about guidance. Guidance is just 1 quarter, man. You gotta think about these companies in years, not quarters. Businesses change all the time. So guys, please like this video, subscribe to my channel, and get back to you in the next video. Peace.